Hello and thank you again for joining the Ascending Abundance YouTube channel, where I explore various ways of making more money with the existing capital. It's always great to spend a little bit less, but at the same time it's even better to make more and not spend less. So I am exploring ways of making money in real estate, stocks, crypto, Bitcoin, whatever comes, business. Any ideas are welcomed, and today I'm exploring in particular real estate, office, REITs and stocks. There's been much talk about commercial real estate having trouble refinancing because of US bank tightening of their conditions in a couple of bankruptcies recently, and apparently a lot of office buildings are still struggling. Their tenant base is going down. The people are not coming back from COVID, the return to office is slow, etc., etc., etc. And when it's time to refinance their debt, they won't be able to refinance because their income is not that great, and banks are tightening their conditions. So a lot of office buildings are going to be sold. The prices are going to fall. Commercial real estate, and particularly properties with office space, are struggling. So I took a look. Maybe there is some opportunity to short somebody or whatnot. Just literally Google it, real estate office stocks. And what came to me is one company that I'd like to invest in as opposed to sell it. So I just kind of Google it up. Lots of companies come in. I clicked on the monthly fool. It's a well-known website. And just kind of going, here's the top 6 real estate stocks. And if you look at, there's Office REIT, Alexandria Real Estate Equities. Okay, great. I figured we'll take a look at it. So Alexandria, which is going on their website, literally Google Alexandria Real Estate Equities Investor Relations, comes up with this. I click on an annual report for last year. I don't really care for the latest quarter. I mean, you could read it as well. It's no big deal. And here is what comes up. So we go from the top of the report. In the very first few pages, they kind of brag about a few important things. They're top, they're great, that is wonderful, but what caught my eye is that they have delivered better returns to their shareholders over the 25-year period. Better than Walmart, better than Berkshire, definitely better than S&P 500. So these type of bragging got my attention immediately. I also wanted to see what else they got, so this is some comparison, blah blah blah, chairman letter. What's all interesting, what caught my eye is that they don't have any debt maturities until 2025. That means higher interest rates are not impacting them at all. 99.4% of their debt is fixed. Their fixed rate is 3.5%. They're not moving anywhere because of the rates, and the rates are hopefully by 2025 are lower, plus they can refinance at higher, kind of longer maturities. So maybe they will be able to refinance this debt at the similar rate or even smaller rate. And overall, the fact that they fixed their debt, which is the most important component of any REIT, that's super important. They took the right step, and I commend them for it. So with this in mind, and I kind of look at what do they own. So office buildings, right? Well, if you read about Alexandria, they don't own office buildings. They own campuses. They own campuses for pharmaceutical industry. They're quite diversified. I mean, there's a whole bunch of examples here, this and that. There was a pie chart, even I don't see it anymore. There was a pie chart that shows that their base of tenants is really diversified. Maybe this one. Life sciences, multinational pharmaceuticals, biotechnology. This thing is not going anywhere. The campuses for Bristol Myers or Pfizer, they're going to continue tinkering with their biochemicals. They're going to still need to come to the office to do the chemical analysis. They will not give up their campuses. I don't believe so. And in fact, if you're managing it, then quite likely you can increase the rates because of inflation and all that stuff. And if your fixed costs of debt is the same, then this is a great company to look at. So I found their financial statements. They're on page, my God, 202. And I really like what I see. They got assets of $35 billion. Against the long-term debt of only $10 billion. I mean, there's some small stuff here. So they're really not leveraged. It's like 30% leverage. Their equity is like a biggest chunk of their balance sheet. So you cannot go bankrupt if you have really low debt and that debt is fixed. So these guys are rocking it. I took a look at the income statement. It looks solid, looks good, although their net income is going down, so you can see like per share and so on. But that's deceptive because there is a depreciation charge. For any REIT, you don't look at the income statement. You look at the cash flow statement. So that's a couple of pages down. Looking at their cash flow statement, they're generating more and more operating income, 1.3 billion. And then obviously they're investing more in real estate and they have to finance it. So additions to real estate and purchases of real estate against some sort of the proceeds of disposition, that's still about $5 billion. So they're obviously not funding it clearly from the cash flow. They're borrowing against it. And that's fine. That's the whole real estate. You buy your own house. You also don't put 100% down. You put in maybe 20, maybe 10, maybe even 3. So I wanted to see how much do they pay in dividends, and their dividend payments are about 757, which is roughly, I didn't calculate it, it's just over half of their operating cash flow. So the other half stays and remains for the reinvestment, and then they borrow at these good rates and maintain their position. So that tells me that the dividend is super safe. That dividend, then I wanted to look at what is that dividend. Are they growing it? And I found out that, yeah, every year, as you would expect, every year, now it's 121, keep going, keep going, keep going, right? Like it's gone twice, right? From, say, in 13, it was 0.6. Now it's 23, it's going to be 1.2. So we're talking doubling in 10 years. Is that amazing? Probably not as amazing, but not too shabby either. I know my salary didn't double in 10 years, it probably went up, but that's because I got promotions, etc. If I do nothing whatsoever, I'm not going to double my income. Meanwhile, if you invested in Alexandria, your income would have doubled. As with many other dividend stocks, don't get me wrong, but they're doing it the right way. And then I said, well, okay, their dividend is about 4%-ish. So what does that look like historically? If you look at their dividend yield, that's a good indication of when to buy a company, unless you're super concerned with their financials. But if the net financials are solid, then the swings in the market will probably dictate the entry points. So for the max, or I look at, they have never been this high. Like above 4% for Alexandria is unheard of. So unless they go through this major issue and they just go bankrupt or something, I don't see them kind of dying. I really don't. In which case, this is a fantastic entry point for dividends, but not because of dividends themselves. I mean, dividends are nice. I am thinking about the price. The fact that dividend yield is high means the price is low. And sure enough, I go to TradingView. This is a weekly view, all the way going down to 2012. So this is 10 years of view. And we are today at the prices that they've hit at the bottom of 2020. And before that, there was this huge support for technical analysis, folks. There was this huge support around 110, let's say 115. So we're just slightly above that. It's a phenomenal opportunity to buy a company that continues to grow, that delivers wonderful cash flow. They've gone, look at it, from the peak of 215 or so to down to 125. If we do a really quick calculation, which I haven't done, so that's 124 divided by 215. They're gone down 40 some percent. So if this is not a wonderful opportunity to buy a good company, especially if you believe that the interest rates are going to settle down and lower in the next year or two, this is a great opportunity. The way I'm playing it is I looked at this analysis just a couple of days ago. The company was at 121. I think I looked at them right here just literally a couple of days ago. It was about 121-ish, so really close. And I sold a put at 115, and I figure if it hits 115, I'll just buy it. Not like I won't even bother. So I sold 4 puts, got some change. I don't recall what the exact price was. Probably made something like 500 to 800 bucks. If it drops, I'll buy it. If it doesn't drop, I'll pocket my 500, 600, whatever I sold it for, and do it again, unless the company really skyrockets. If you have extra cash and you believe that this thing could continue growing, then maybe that's the way to park the money. If we compare it to S&P 500, for example, then let's see, they've really gone down. Like it's crazy how much of a discount you're getting. But if we zoom out and look at like a longer term trend, just before this drop, I mean, Alexandria was beating S&P 500 all the way, paying great dividends. So, you know, it could be an opportunity. It could definitely be. So with that, I think this disconnect is just overdone, overshot, and even though there you can technically write down, you can technically say, well, here's the support, they breached the support, and now it's a ceiling and it's going to stay there and might even go down. I mean, technical analysis could tell you anything. There's just kind of lower highs. I don't see lower lows. Not really, but maybe you could put a line here. So all kinds of technical things could happen. I don't even know how to read the charts. I'm not a technical guy necessarily, but I do see fundamental benefit in picking up this company, or at least attempting to play put options with it. Good cash flow strategy without parking any cash. So thank you so much for watching. Much appreciate your time as always, and please hit the like button, subscribe button, whatever the other buttons, so that we could continue posting additional ideas. Thank you.